Hello, this is Ernest Burley Jr., your CIA, your cool insurance agent, back at you again with some more great information on insurance. I'm a licensed insurance agent with over 30 years experience in the industry and clients all across the country, from the West Coast to the East Coast, from the North to the South, all over. In various capacities, whether it be auto insurance, life insurance, long-term care, disability, homeowners, condo, renters, business policies, church policies, the whole nine yards. If you have any questions on any type of insurance, just send me an email, call me. I'm more than happy to give you unbiased information. So the purpose of the podcast is to educate you, to enlighten you, to empower you with clear, objective, unbiased information so you can make the right decisions for yourself and for your family, okay? And that's it. We just jump into the podcast. You know, I don't like the long intros, just give you a little bit of information about myself and let's jump on into it. So today's podcast is titled Infinite Banking. Don't do it. Okay. So I know a lot of you have heard about infinite banking. So many of you have heard someone talking about or someone mentioning infinite banking. Okay. So it's a concept that's being pushed out there by life insurance agents that is encouraging people to dump a whole lot of money into cash value life insurance policy. So the concept is to dump a bunch of money into a life insurance policy, a cash value policy, and accumulate enough to where you can be your own bank and borrow against that cash value to do different things instead of using a traditional bank. So buying a vehicle or down payment for a home, sending your children through school, things of that nature. It's saying that you want to be your own bank and not borrow money from a traditional bank. And you do this by adding all this money into a cash value life insurance policy. Sounds interesting, right? Let me let you know about a couple problems I have with that. All right, so here are a couple big problems. Here's one problem. In order for you to accumulate enough cash value in that life insurance policy to borrow against, you're going to have to pay a hefty premium. You're not going to be paying $50 a month or $100 a month or $200 a month. It's going to be a substantial amount of premium that you're paying into that policy. That's number one. That's going to knock a whole lot of people out of the bucket right there, right? Because you have to put a substantial amount of premium in that policy in order for it to accumulate the cash value. Problem number two, you have to do this for an extended period of time. It's not like this bank status is going to happen all of a sudden within the next few months or few years. It's going to take a long time for you to put away this hefty premium into it for it to accumulate and grow to a value that you consider yourself your own bank that you can borrow against and do all these different endeavors that I just mentioned, right? So those are two key problems. You got to have a significant amount of premium, and you have to do it for an extended period of time to achieve this bank status and borrow against the cash value in that life insurance policy. Here's another issue I have with it. In the meantime, you're reducing the amount of money that you're putting into other areas. So you're not putting as much money into your 401k plan, into your IRA, into your emergency savings, into your 529 plan for your children's education or what have you, because of course you have to find that money somewhere. It's not like just money's going to fall out of the sky for you to put into this cash value life insurance policy. You're going to have to sacrifice somewhere to find that money to put into this cash value life insurance policy. And these other plans are going to suffer as a result. Your 401k plan is not going to have as much money contributed to it, or your IRA, your children's education. Now, the life insurance agents are like saying, oh, well, you pay for your child's education with the cash value in that policy. Well, like we said before, you got to put a substantial amount in, and it has to accumulate over a long period of time in order for you to be able to do that. So you're going to sacrifice the other stuff to do that. Sorry, life insurance agents. Sorry, not sorry. Come on, it's just not practical for most people. The vast majority of the population can't afford to do this. Now, if you have the money to do that, you're a baller, shot caller, okay? Some people are in a position to do that. So, but that's maybe 5 or 10% of the population. Some people, hey, they've maxed their retirement plan at work. They've maxed IRAs. They have substantial emergency savings. Their children's education is fully funded. They have the right insurance plans in place to protect themselves and to protect their families. They have everything, and they have a substantial amount of money left over after all of that has been accomplished. If that's you, then by all means, that's something you may want to consider. Okay, that's something you may want to consider because yeah, the cash value does grow. It grows tax deferred. You can borrow against it. I get it, but that's not for the vast majority of the population. Do what makes sense for you. It's not practical. It's not advisable. Do not do it. Do not do it. Okay. And that's it for today's podcast. I just wanted to hit that whole infinite banking concept really quick because that is a big thing. I've had people refer to me from different areas of the country where the person didn't necessarily call it infinite banking, but they had people paying substantial amounts of money into life insurance policies. And that's just not the way to go for most people. It's just not. So please beware of people who are advocating or pushing this infinite banking concept. It's not for you, not for most people. It's just not. Okay. Okay, I'll recap. That's it for our podcast. So our recap is don't do it. I just don't do it. And just for the reason I've already gone over, if you want to email or call me, hey, we can have a discussion about it. Okay. The takeaways, three main takeaways. Large premium. You have to pay a large premium in order to get this cash value to bank status, to where you have your own bank, right? You're on your own bank. Yeah, it's not just going to happen with a $50 or $100 or $200 a month premium. Large premium. Second problem is you have to do it for an extended period of time because you have to pay that large premium, and then it has to grow over a substantial period of time to grow to a status of you being able to pull or borrow money from that cash value to achieve these endeavors, to pay for a home or down payment or a home or buy a car, send your child through school. That's going to take time for that money to accumulate. And the third issue I have is that you have to sacrifice the other plans that we talked about. So your retirement plan, your IRA, your children's education fund, your emergency savings, what have you. The money has to come from somewhere because you're not just receiving extra income from somewhere to do that. So those are the takeaways. Just be really cautious about that type of talk out there, and don't let someone talk you into that. Okay. I want to thank y'all for listening in. I really appreciate y'all listening in every week to the podcast. I ask that you share this podcast with others and ask them to do the same, and so on and so on and so on, so we can make these podcasts go viral. If you want to connect with me, you can just give me an email, ernestburleyjr@gmail.com. That's ERNESTBURLEYJR@gmail.com. Or you can call my firm at 301-262-2600. Again, that's 301-262-2600. All of my podcasts are on YouTube. So please go to YouTube and subscribe so I can get those subscribers up. And look at, there are a ton of podcasts on there on different topics like this one. This is a different topic than your typical topics out there, right? So I also talk about real estate, and I'll talk about all different types of insurance. I'll talk about being a business owner, all different types of things I'll talk about on podcasts. And then I have some 1-minute clips on there too to talk about different topics, just, quick 1-minute snippets as opposed to, a 5 or 10 or 15-minute podcast. So take a look at that, subscribe, ask your friends, your family, co-workers, church members to go on there, subscribe also, and to share the podcast, share the YouTube channel with others, etc. So I really appreciate y'all doing that. And that is it for today. Okay. So I just really wanted to tackle that and make sure you have some clear information on that infinite banking concept that's going on out there. Okay. So that is it. This is your CIA, your cool insurance agent, Ernest Burley, signing off. Until next time, y'all be safe out there and take care. Okay.